Hello and welcome back for another Fetch AI price prediction update, and in this video I'll be diving deep into the technical analysis here on the Fetch AI chart and also give you my next price targets. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And I want to start the video by first giving you my long-term outlook here on the Fetch AI chart, where you can see that after seeing our November lows, we saw a very massive bounce to the upside in a 5-wave structure, having the wave 5 taking us to an all-time high at around the $0.6 mark, completing the formation of these larger Elliot wave count 1. Then afterwards, we started a breakdown move in the formation of a larger Elliot wave count 2. Minimum target areas highlighted on the charts using this red target area we have now fully maximized, and there are high chances that the low for this higher Elliot wave count 2 is now in, and Fetch AI is now ready for a massive pump to the upper side in the formation of these larger Elliot wave count 3, and giving you minimum target areas for that third wave to the upper side by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That now gives me a minimum target area at the fib level 1.618, and that is at around the $1.0677 mark, and that is the minimum that we can expect Fetch AI to do in the formation of that larger Elliot wave count 3. And for it to confirm to us that the low for the second wave is in, and the start of an impulse in the formation of these larger Elliot wave count 3 has now started, all I need to see on the charts is a complete 5-wave move on the charts, followed by an ABC corrective structure. In case we are able to see such a scenario here on the charts and a break above significant highs, that will be enough confirmation that the low for this second wave is in, and Fetch AI has now started an impulsive move in the formation of that larger Elliot wave count 3. And I believe we are seeing such a scenario here on the charts. So if I zoom in to give you my micro Elliot wave count here on the charts, you can see that after seeing our massive crash on the 10th of June, we have been seeing this nice recovery to the upside in what now we can term as a larger Elliot wave count 1. So we can term this whole scenario over here as a larger Elliot wave count 1. And I believe that soon we are going to see a bit of a breakdown move in the formation of a larger Elliot wave count 2 before we can continue gearing up in the formation of that wave 3, then expect a wave 4 and a wave 5 to the upper side, and giving you minimum target areas for this second wave to the lower side by connecting the fibs from the low of the first wave to the high of that wave 1. I get a minimum target area for the second wave between the fib level 0.382 and the fib level 0.618, and it is within this blue target area that I can expect to see a reaction to the upper side in the start of an impulsive wave to the upside in the formation of this wave 3. So there are chances that we might see a bit of a breakdown into this blue target area between the $0.2237 mark and the $0.2044 mark before we can start our impulsive move to the upside in the formation of that wave 3. And once you have a complete 5-wave structure to the upside, followed by an ABC corrective structure, that will be enough confirmation that the low is in and the start of an impulse in that wave 3 has now started. Also taking a look at the indicators here on the RSI. On the RSI, we are trading at around the 56 mark. Also taking a look at the MACD, we have been able to print a bearish cross, suggesting further breakdown into that blue target area. So let's be patient and see how that plays out, and I'll be keeping you updated.